What is up? This is the Working Investor. In this video, we're going to talk about the ultimate long and short global ETF that one of my members of my Discord mentioned. By the way, I do have a free Discord if you guys want to come join. It's free, but nobody will ever spam you. And this long and short ETF is beating all the other long short ETFs that I found so far. It's called ORR, and it's run by Mr. David Orr. And he is a former poker player turned hedge fund manager because he did such good tradings that he posted on Twitter. People were literally lining up the door to give him money. He did great performance, supposedly. And then he ran a fund, an ETF called ORR that launched in this year. And he is shorting all the retail investors who are investing into YMAX, into RYLD. His number one short is QYLD. He's shorting SDIV and shorting some business development companies as well. His website is clunky and his personality is a little bit quirky, but we're going to get into this ETF nonetheless. As always, nothing here is financial, tax, legal advice, or anti-retail advice. This is purely for fun and entertainment purposes only. Let's get into the video. So let's just look a little bit at the overview of this ETF. The website is very clunky, and you can, as we spoke about Mr. David Orr. Now, the expense ratio is actually 1.3%, but then there's a whole bunch of other expenses that it's weird how they have to add it all in. So it looks like it's 14.19%, but that's just the way they have to plug in the expenses. They do that with business development companies as well, and I believe closed-end funds. And those include like margin costs, shorting. Because he shorts a lot of income stocks, the income that they get from the dividends, he has to include it as part of the expense ratio. There's a lot of other stuff that kind of fuzzies up the actual numbers. This thing already has $151.42 million of AUM, and this thing just launched January 14, 2025. It's been around just under a year. In a previous video, which I'm going to link in the description, we spoke about CLSE, which I like, from Convergence. The problem is that CLSE is US based, mid cap, large cap. It's not global, such as the mutual fund from AQR's long short equity fund, QLENX, which is at least global. And that's like an OG. It's been around since 2013, and this has, I think it's $7.044 billion of AUM, which I also will put a link to a video that I made covering this long short fund. Now, long and short is a type of hedged position, a type of hedge fund strategy that hedge funds deploy. There's many different strategies that hedge funds deploy. From the type of hedge fund strategies, the long short strategy is the one that has a chance of matching up with equity performance or even surpassing. As you see, this long short from CLSE did better than the S&P 500. But of course, when you add in QLENX, the mutual fund, and some people have limitations with mutual funds, this thing is up 30% for the year. This is more than double the S&P 500 and also beating CLSE. But if you're looking for a ETF, like we were talking about, ORR, I mean, this is from year to date, or actually, this is from year to date right here. It's missing the 2 weeks of data. You could see that ORR is still, even though it's missing 2 weeks of data, it's still beating QLENX by a little bit. And this is an ETF wrapper, and of course, it has a little bit more of volatility. So I was just going to watch it for a bit, but then when I realized that it shorts a lot of the retail stuff, the cover call funds, I got really interested because it shorts the cover calls, and it's brilliant. And you can see an article here, and it describes it brilliantly, what I'm thinking. And this is from capitalventures.com. I could put a link in my description of this article. Here the author asks him, you are short numerous business development companies such as Runaway Growth Finance or Eagle Point Credit or Oxford Lane Capital, as well as various synthetic, quote-unquote, ETFs such as the Russell 3000 cover call ETFs, RYLD, YieldMax or NavMax's YMAX, or Global X's Super Dividend ETF, SDIV, And of course, QYLD, as you saw, is currently, because this is from July, is currently its #1 short. So is there a common thread in these shorts? Is there a structural flaw in some of these synthetic ETFs? What a good question. So this is where David Orr, and look, he's putting his last name as the ticker symbol. So he really wants to make sure, I would imagine you put your name to it. You want to make sure this fund is successful. So he says it makes sense. You know, why didn't other people think about this? The appeal of these products is that they have less upside volatility, right? They have capped upside. I short these in the hedge fund to protect against market melt-ups, because if you're shorting something and the market melts up, you're in trouble. But because they're capped on the upside, that protects you from that market melt-up. However, in the ETF, they're much larger positions because I cannot make short-term trades in the ETF vehicle like I can in the hedge fund. I want to avoid tough spots with a margin of safety. Lower upside volatility, thus more value in the ETF vehicle. In the article, it mentions that he went through every single stock in the Russell 2000. I mean, this guy goes through everything. He's quite a nerd. A lot of hedge fund managers are a little bit nerdy, which is good. You want to have an analyst quant that looks into everything. So here you can see their #1 short longs. So they're long like TSM, JPY, which is, so a lot of like the Japanese yen. He's long Google. You can see here all his big longs. And then when it comes to the short, and you see he has a lot of Japanese. So this is global. This is not just US. A lot of different small companies in Japan. He's very long right now. Like, I mean, a lot of JP for Japanese, a lot of Japanese companies. Excuse me. And when you flip over to the short side, where you see the negative sign in front of it, you can see here some of the US, like CarMax. He starts shorting CarMax, Digital Realty, Brookfield Corp. He's pretty much like bearish on vehicles. He's shorting Prospect Capital Corp. Here's the RYLD that he's talked about in the interview. YMAX, shorting YMAX, 2.18% of the position is shorting YMAX. This is the all these other income companies. He's shorting the triple leverage Russell 2000. So he's pretty much saying that, they were kind of like a risk-off environment, I imagine. And then, like you see, SDIV, Global X, that's a 9% position. And then QYLD, he's very confident. And, 27% of the weight from the short, he's putting into QYLD. Well, weight from the ETF, because actually long short is actually leverage. It's actually using over 100% weight because he's using leverage. And so 27% of the weight is like, I'm betting that this NASDAQ cover call ETF is going to suck in performance. And let me show you how bad this thing sucks. So this is the OG that's been around in the cover call space. So I actually could pull up a 5-year chart and go back to 2020. And you could see here QYLD is pretty much only delivering you a total return. That's with the dividends of almost 42%. But if you take away the dividends, because remember, he's shorting the price, not with the dividend, yowzers. He's like, QYLD, take away the dividends, it's down 23.11% in 5 years. Ouch. While the Qs is up almost 102% in 5 years. So yeah, that's a great arbitrage. Long the Qs, short a crappy cover call ETF. And look at that spread. That spread is the magic secret sauce of making money. And it's so obvious, so clear that some of these cover calls funds suck and some suck really bad. And why not make money on the suck, on the arbitrage? So if you're fed up with cover call ETFs, like I am to an extent, it's like, stick it to the man, buy this short, anti-retail investor ETF. Nah, I mean, I still have some cover calls, but I've cut down so many. Anyways, I hope you guys enjoy. Just a quick find. Again, shout out to one of my Discord members who found this. I really appreciate my group. And I hope you guys have a wonderful week. All the best. Be well.